Stocks heavily weighted on future growth, such as AMC, are continuing to outperform today, with the Nasdaq up about 1% and the Dow is down about 1%. So you're seeing this migration away from your Dow stocks into higher growth, more speculative stocks as of right now. But the interesting thing about this is that these speculative growth stocks are actually much cheaper than a lot of your Dow stocks. So I think this rally today is still warranted even after the 7.5% green day on the Nasdaq that we seen yesterday. But as you guys know, if you're watching this video, we like to focus on AMC because we think it offers a much greater risk to reward profile than a lot of other stocks, given that we are on the cusp of seeing another short squeeze. And today is a weird one, guys. Ortex is not reporting to us the cost to borrow rates and the live short interest. There's just no information available, which is quite convenient considering AMC rallied 18% yesterday and they are up 8% here at the time of recording this video. So we're going to go through the latest numbers, the technical analysis, what happened with the Michigan Consumer Sentiment Survey today, how that is bullish, how that is bearish, and we're also going to look at the Stonko tracker data and the option chain to look to see if we could expect a little bit of a gamma squeeze over the next couple of weeks and where those key levels will be for AMC. And obviously, we'll take a look at the charts as well. So guys, let's get straight into this video. Hit that like button and subscribe to the channel if you guys have not already. Thank you for watching. If you guys want to come trade with me live in real time as well, link down below in the description of this video. But without any further ado, let's dive straight into it. So AMC is up 8.24% here today. Obviously, this is the continuation rally from the good CPI that we got yesterday. CPI was just much better than expectations, especially core CPI month over month. That thing came in 100% better than what the markets were expecting. And it goes to show that maybe inflation peaked out in June. Maybe we are at the peak of inflation. And if you're at the peak of inflation, even if the Fed continues to raise rates a little bit more from here, the bottom of the markets might be in. Now, with that being said, there's been so much shorting in a lot of these key names, such as AMC over the past year, that there's a lot of short positions out there on AMC, on many other stocks, on the broad markets, just to get to a level of neutral. You're going to see a lot of buying pressure on the markets, and especially at these valuations for a lot of the stocks that are running up over the past 2 days. They're very, very low, even relative to your Dow Jones Industrial stocks, which have a much higher PE for most cases than a lot of these stocks. So for a lot of reasons, this rally actually makes sense, and it could be pretty aggressive. As you guys know, back in August, last time we had a rally like this based off of the CPI report, which wasn't even nearly as good as the CPI report that we just got, the markets rallied very, very aggressively. And you guys can see that right here with this chart. It was pretty much a slow and steady mountain-like move to the 200-day moving average. Now, we're getting close to that level. We're not quite at that level, so there could still be some big upside here to come, and it wouldn't surprise me to break out above that 200-day moving average, especially if the next CPI report coming on December 13th is also a bullish one, and the jobs data in between now and then is also, looking good. Labor market softening a little bit. That's what we want to see right now. Now, as far as AMC stock, and actually before we get into that, let's talk about the Michigan Consumer Sentiment Survey briefly for you guys. And this article says Michigan Consumer Sentiment, Climate Summit, and the Bond Holiday, 3 things to watch. And that's important to point out, really all of these, but most importantly, the Bond Holiday, Veterans Day, shout out to all the veterans, and the Michigan Consumer Sentiment Survey. So analysts were forecasting a reading of 59.5, which would compare with the previous reading of 59 59.5, which would compare with the previous reading of 59.9. If we click on what the actual Michigan Consumer Sentiment Survey came out as, it came out at 54.7. So consumers are not feeling very confident right here. It definitely got worse, and that in a way is a good thing because that's what the Fed wants to see, right? They don't want the consumers to think just everything's fine and dandy. They're willing to keep paying higher prices. They're going to keep spending money. So in a weird way, the Michigan Consumer Sentiment Survey dropping the way it did, I mean, it did drop pretty decent, about 5 points, which is one of the larger drops that we have seen throughout 2022, it can be seen as a bullish thing, and it looks like the markets are looking at it in a bullish light, given the NASDAQ is up well over 1%. But another big part of today, at least what we're seeing so far, is the bond holiday. So today, Friday 11th, is the Veterans Day holiday in the U.S. Stock markets are open for normal hours, but the bond market is closed, and the bond market is much larger than the stock market. And essentially why this is important is because bond yields, what bond investors do when they sell or buy bonds, they're just pushing up and down the yield. So when the bond markets are closed, it gives the markets, the stock market, a little bit more room to really do its own thing, right? If bonds started to tick up, if bond yields started to go up today, it probably would have put a big damper on this rally in the NASDAQ, but bond markets are closed. And as you guys probably already know, if you don't know, yesterday's drop in bond yields was one of the largest drops in bond yields that we have ever seen in a single day. And bond yields dropped 0.33 basis points for the 10-year Treasury. That is an insane drop in the bond yields. That in and of itself is a monumentally bullish thing for the stock market. And as you guys can see right here, this rally that really was, leading up until August, July through August, you had seen big drops in the bonds, but they continue to go lower from here. So if we continue to see bond yields trending to the downside, that's going to show markets that maybe the Fed won't have to raise rates as aggressively. Maybe inflation has peaked out, and it's going to mean cheaper cost to borrow rates for mortgages, for car loans, less chance of a deep recession. So that's why the bond market is so key, and I think that's why the markets are rallying today again in the NASDAQ, because of the bond market being closed. It really helps to free a lot of things up. Now, in regards to AMC, what we are seeing here on the day is very interesting. If we go ahead and refresh the Ortex data right here and right now for you guys, click on live short interest, there is nothing available. The last numbers that we knew for AMC, the cost to borrow average was at 93%, the cost to borrow max was at 345%, and the cost to borrow minimum was in between about 45% and 15%. So these numbers are extremely elevated, and the last shares that were actually borrowed was 1,000 shares for a 55% cost to borrow rate. So this is really telling you that people expect a very volatile move with AMC, likely to the upside. As we know, there's definitely a lot more upside bullish momentum as of right now, and that's going to help squeeze out these shorts from their short positions, especially because a lot of these cost to borrow rates are not fixed. A lot of them are fluctuating, right? So when there's more volatility, a lot of their overall positions demand more collateral, and that in and of itself helps to push out the shorts. But especially with AMC, it's very interesting because AMC as a business fundamentally is a lot more attractive. It's not as egregiously overvalued as it once was. And at the same time, you have Black Panther coming out. You have Avatar coming out here in just this next quarter, as well as a whole slew of other movies during the same time, as well as in 2023. So like I said in the last video, if you're a hedge fund and you're looking at your position in AMC, probably got some gains, right, from shorting the stock from whenever they were shorting the stock. I would be surprised if a lot of shorts were still underwater on AMC, but you look out 3 to 9 to 12 months and you say, hey, what's really the, bearish catalyst that could be coming from AMC? What's the bearish surprises that we could get? And the only thing that I can really say is that somehow if AMC does not be able to make a profit, right? If they cannot make a single dollar in profits over the next year, that is a reason potentially to keep a short position on AMC. But as it looks right now, if we just get those movies heading into theaters like we're starting to see now, really there is no short thesis left. There's no short thesis left once AMC makes any kind of profits, and they're already free cash flow positive, not quite actually positive on their earnings calls. Hopefully that makes a little bit of sense. But as of right now, guys, the short interest is sitting at 20.51%. The free flow out on loan at 36%. The shares out on loan 186.42 million. Days to cover 5.69. Cost to borrow, it says right here, the trailing 3-month average at 22.31% and 100% share utilization. So looking pretty good right there. And this is the strangest part. We actually have option activity data today, but you don't have short interest data. You don't have cost to borrow information coming to us. So very, very weird. I don't know if the numbers are just so volatile they can't put a clear number on there. But either way, the option activity is looking like 9% positive order value. 14 orders totaling $777.5 $0,000. So it doesn't look like there's a lot of positive options on AMC, but it doesn't even matter. AMC stock is continuing to rally. As you can see, 61% of the total calls here on this Friday option expiration are calls, and 38.62% of the open interest is puts. And for next week, same story, pretty much in line, a little bit more bullish though, 65% of the open interest being calls and 34.5% of the open interest actually being put. So it looks like next week might be a pretty eventful week. And if we look at the stock O tracker data as well, that's kind of what it's looking like. So as of right now, you have about 19,657 calls that are in the money. Let's actually go ahead and refresh this page. Yeah, it just did spike as well quite a bit. Now you're at 28,000 calls that are currently in the money, and 149,000, almost 150,000 calls that are out of the money for this next Friday. And that could, definitely cause a gamma squeeze in my personal opinion, given where the options are actually placed on AMC. So when you look at the actual chain here, a lot of options just went into the money here today at the 650 strike, about 14,000 options. And then you got another 14,000 options at the $7 strike, almost 9,000 at the 750, and then over 21,000 at the $8 strike. So if we can get up to, that $750, $8 range, these options are $13 a piece. So the hedging is going to happen very, very quickly. And you're also seeing a lot of activity on AMC options here today. Just look at the volume levels. 10,000 for volume on the day at the 650 strike, almost 10,000 at the $7 strike, 2,000 at the 750, 4,400 at the $8 strike, a couple thousand on virtually every other strike as well down the chain. So there's definitely that interest in playing AMC options. And from my perspective here, the risk to reward ratio looks a lot better playing an upside move in AMC, and I think that's pretty clear to see as of right now. But guys, at the time of recording this video, AMC is trading at $6.70 per share, approaching the 50-day moving average at $7.21 per share. We'll see if we could do that in this last stretch of trading here today. That would be a very, very encouraging sign if we can break out and close above that. But I'm not gonna hold my hat on it. I'm not gonna expect it. That would be that would mean the stock would have to close up like 20% on the day. So it's possible, but probably improbable. Now, what is probable, in my personal opinion, is this rally continues next week, as in 2022 we have not gotten a lot of positive data at all, especially not within inflation, and especially not at a time where the Fed's talking about slowing down the pace of rate increases. Like I said earlier in this video, that probably means the bottom is here or right around the corner. And if that's the case, you want to get ahead of the actual Fed pivot. And a lot of people are going to try to call the bottom here very shortly. In that case, you probably want to get out of some of those short positions. So I do think next week you could be looking at some pretty decent levels from here. A couple dollar move to the upside, breaking out above the 200-day moving average looks pretty I wouldn't say certain from here, but it looks pretty probable from where I currently sit. And the last time that happened, last time you broke out above the 200-day moving average, you pretty much went up another 22.5% from that moment, a little bit more than that, call it about 25% after breaking out above the 200-day moving average. That was back here in August. So if it happens again and you were to rally another 22.5%, that's gonna, or just call it 25%. I don't think my cursor was on the right spot over there. That would be putting you at about $11.60 per share. I think that would be a very encouraging move, considering these options are $13 for a $7.50 call, right? There's potentially a lot of money to be made playing those options. Nonetheless, with the RSI, we are just over that neutral level of 50, sitting at 53.13, so looking good right there. And the MACD is trying to go back into positive territory, but here over the near term, the last couple of days, the MACD has definitely went quite bullish, guys. So AMC stock currently up over 10%. Looks like the short squeeze might be on and popping as of right now. Let me know your thoughts, comments, questions, or concerns down below in the comment section. That is going to be it. If you guys, like I said, want to come trade with me live in real time as well, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.